Holy cow. Gotta love this Fed, I guess. Man, what a day. Market started out weak this morning. Hit some important support levels that I highlighted in the chat room. Got a little bit long. Data came out, was a little bit bullish. You know, keep looking at this economic data, guys. I don't know the numbers, but it's been weaker kind of consistently over the last month, but obviously the markets don't care about that. Initially, the bonds rallied, notes rallied. I actually made money today being a bull. The rally went a lot further than I thought it was, though, too. I think they stopped out a lot of shorts. And then we started getting this talk about, you know, the Fed minutes and the taper. I don't know if you guys saw my personal Twitter yesterday, but, you know, I posted, alright, again, you know my problem with history and memory and stuff, but 4 of the last 5 FOMC minute days, I went and looked at it. The notes were down 3/4 of a point, like 7 ticks, up 4, down 3/4 of a point, and then down 7 ticks. And today we're down 15 ticks as I speak here, about 2:30 in the afternoon. The trend is your friend. I did not jump on the short side, unfortunately, like I probably should have. But, you know, had a good morning, didn't want to give it back, and sat here and watched the madness and tried to figure out what's going on here. The bonds have actually taken out their lows from the middle part of November here on this sell-off. The 10-year has not. The yield curve has steepened quite considerably. Somebody posted a chart that I retweeted on my personal Twitter, and it was interesting. I guess when the Fed started QE2, 2 years to 30 years was like at record highs. We're quickly approaching those record highs. Even though the stated purpose of QE3 and QE4 from the Fed was to lower long-term interest rates and mortgage rates. Not working. I do think, you know, after reading the minutes, that they do want to taper, probably because 2 reasons. I think that they see that it's not working and that it's causing dislocations in the market, obviously, and you know, I think it's causing more dislocations. The S&Ps are down, what, 900? The bonds are down 1.5 points. The 10-year's down 0.5 point. Ultra bonds are down like more than 2 points. Stuff's not working, guys. You got problems here. I don't have the answers. I'm not that smart. I'm just a dumbass trader. So. But looking forward here, bonds are hitting some really important support levels here. This 130.30 level, if you draw a trend line off of the last couple lows that we've seen, important daily lows. I want to say what, October or November 12th and like the middle of October. We're sitting right on that support trend line here. I certainly don't want to bottom fish, but I would not be surprised to see some kind of a bounce. A lot of data coming out overnight again. A lot of the European PMI numbers, and I think we get jobless claims tomorrow and some more PMI numbers. You know, with this big volume sell-off today, down, you know, 0.5 point in the notes with 1.48 million contracts. That's the biggest volume we've seen in probably a month. I certainly don't want to try and catch the falling knife here. I'm looking for some further weakness here. My next big support level in the bonds, I don't see anything until you get down to like 129.30. So what's that, another point roughly from here before I'll even try catch a falling knife trick. And on the 10-year, I guess I'm looking at a test of what, 125.25. The same support trend line that the bonds are sitting right on right now is what, almost you know, 10, 15 ticks from here on the 10-year note. So I'm kind of looking for those levels before I even think about trying to catch a falling knife kind of trade. But again, I wouldn't be surprised to see a bit of a bounce here. Bonds can bounce back up towards, you know, 131.5. I'm going to look to try probably a short at that point. So, got my game plan. What else, guys? I'm tired. Have a great night. I'll see you tomorrow.